All right, now that the recessionists have made a, let's say, timely comeback, Friday's big non-farm payroll report is more important than ever. Unfortunately, today we got some mixed signals in the employment front. Everybody was focused on ADP's payroll report, a suboptimal number from the nation's largest payroll processor. But you know what? This morning, we also got results from Paychex, the second largest payroll processor with a substantial human resources outsourcing division, and we learned about some healthy business formation among small and medium-sized enterprises. Paychex delivered a solid top and bottom line beat. Even better, management raised their full-year forecast slightly. That's how the stock was able to rally 1.8% in a hideous tape. Oh, by the way, it's got a bountiful 3% yield. So what do these numbers mean? Let's check in with Marty Mucci. He's the president and CEO of Paychex. Get a better sense of the quarter and his company's prospects. Mr. Mucci, welcome back to Mad Money.
Thanks, Jim. Good to be here.
Okay, Marty, I'm going to just say, because, I think that most of the analysts who cover you have been negative, quite wrong. I'm just going to quote from a Wedbush, good firm, but their headline is, results better than feared. Marty, the results were good. Who was fearing these results, given the fact that you've been putting up incredible numbers for years now?
Yeah, I don't know, Jim. We had a solid first quarter, and it really carried through from last year. 15% revenue growth, part of that from our Oasis acquisition. But we had solid revenue growth, 9% operating income growth, and really felt good, particularly about our mid-market sales and our repositioning of the company for technology and HR focus. So we felt great about it.
Now, one of the things that we have, well, not just our network, but everybody, the papers, whatever, have been convinced that we're having a serious slowdown and that there's going to be big layoffs and a recession. Marty, I'm looking at your transcript, and you talk about job growth actually ticking up a bit. What's wrong with the end of the world picture?
Well, yeah, in September, we released our small business index. These are businesses under 50 employees, and it actually ticked up for the first time in a few years. So we saw, 1 month doesn't make a trend, but we certainly saw job growth pick up a bit. It's down 1% from last year, the job growth level for small businesses, but that's because it's a tight market, and it's tight for small businesses to hire and retain folks. But right now, we're feeling pretty good on the business sentiment.
Yeah, when I read your transcript, I said to myself, oh, boy, I got to temper the negativity because you represent too many companies. Further, you did a survey of your clients about the trade problems with China. What did that say?
Well, about 25% of our clients feel like they'll be impacted by trade and tariffs. But 3/4 of the clients, these are businesses pretty much under 50 employees, are pretty regional. They're local businesses. They're doctor's office, restaurants, contractors. They're not impacted by the tariffs. That quarter that is, will have a little bit tougher time leveraging, changing supplier routes and supplier chains and so forth. But 3/4 of them will not be affected based on our surveys.
And I melded the first and I asked with the second, which tells me that there's still good hiring if they can find people despite the trade war.
There really is, Jim. We felt the other thing that picked up on our small business index was the wage rate. The wage rate went up to 2.8%. We've seen it around 2.5 to 2.6. That went up. The hours worked went up. So our feeling is that while businesses are a little bit concerned overall about the economy, the demand for their products is still there, and they're out trying to hire. The biggest challenge is hiring people to fill the demand that they have. That's good news.
Well, that's quite different from the biggest challenge being they had to fire a lot of people. 401ks, I know you've got a huge business in that now. You probably get a pretty good look from human resource people. Are people enthusiastic about investing here?
They really are. The retirement business is continuing to be very strong for us. And, we've introduced online on the mobile app, you can enroll as a participant from the client. Their employee can enroll in 4 clicks on our mobile app. That has double-digit increases in participation rate in the client's 401ks. That's good news for the clients because they're getting more people into their 401ks, good for retention, and it's good for us from a client retention standpoint. So this has really helped us a lot.
Yeah, I'm going to encourage small business people who are listening, you should get this service because it is very difficult and cumbersome for a lot of employees to even go to the 401k, and this makes it easy, as does the wearable watch idea, which I imagine that the clients must be excited about.
They really are. This move to wearables that we've introduced now takes a lot of the power of our mobility app and our online apps onto the wearables, so you can punch in and punch out as a time clock. It has geofencing, meaning you can punch in from a different area the client can set up. There's a lot of remote workers. You can do a number of things on your smartwatch, and that's going to continue to grow. So we really feel like we've positioned Paychex from the service business that it has been for a long time to be a technology and HR-focused business, and that's all good for us and our employees moving forward, and certainly for our clients.
Last question. Since everyone thinks there's going to be a recession, except for maybe you and me, and the millions of people who are doing the hiring in this country, the difference between your company now and 10 years ago?
Yeah, big change, very much technology. You know, we've always been about service, but service has changed. It's very much about the clients and their employees having the opportunity to do things themselves when and where they want to do it on a mobile app, which we're very happy with, a 5-star mobile app under Paychex Flex, and that you can do things now on wearables. So it is service, but it is an HR technology-focused company, very different than where we were 10 years ago, and very much positions to support our clients and the value we bring them.
All right, but of course, very the same in terms of trying to return capital to shareholders with a great dividend. Marty Mucci, Paychex President and CEO. Great to see you, sir.
Thanks, Jim.
Yep. It's been 50 points since we've been behind this. We're not changing. Still good. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.